And here we go. So learning objective 2 picks up where learning objective 1 just ended. We have to assign those costs to the work that's being done, okay? And so the next step is to start moving money out of the raw material accounts and factory labor accounts and manufacturing overhead accounts and moving those over to the work in process inventory. And that's what we're going to be focused on in learning objective 2 and learning objective 3. How do they know how much to move? Well, there's a whole bunch of sheets that are being used that tell accountants and managers how much each job is being used in terms of raw materials, in terms of labor, things like that. So we're going to be learning about certain sheets that are used specifically to record the costs that are then charged to specific jobs that are being done at the manufacturer. And this is what a job cost sheet looks like. Of course, it's blank. You know, it's going to be wonderful when it is filled out. But a job cost sheet will eventually be filled out specifically. Notice it has a job number on it. There might be specific issues in terms of what item and quantity of items and when it was completed and requested. Important things would be the dates that being used, how much direct materials will be used, will be listed here. And it's going to be related to this particular job. It has to be related to a particular job. Same thing with direct labor. It's going to be related to a particular job. And the same with manufacturing overhead, going to be related to the same specific job. And that's how they get the total cost. And then based on how much was actually produced, they know the unit cost. So the unit cost per unit produced. If I produced 100 cars, and it cost me $100,000 to produce 100 cars. They'd be pretty cheap cars. But anyway, that would be $1,000 per car unit cost. The total amount of dollars we spent divided by the quantity. Right. So this sheet eventually gets all filled out, but this is a cost control sheet that we use. It has signatures on it, etc. But it's important. It's important because you'll see these filled out as we go through the next couple of parts of the chapter. The first thing to do is in manufacturing is we use raw materials. And so the very, very first thing we do is we need to assign a certain amount of raw materials to a job. How is that done? Well, if we need to make 2,000 bags of potato chips, then we're going to need X number of potatoes. So the potatoes are going to be requested through something called a materials requisition slip. Okay, it's literally written authorization saying, can we have these raw materials because we need it. Okay. And so that's something that you're going to be learning about too, is this, a materials requisition slip. Okay, so in this case, Wallace Company is sending 200 lithium batteries, that's their inventory number, at $5 a battery or $1,000 total to the assembly department for job number 101. Okay, remember it gets requested, it has to get received by materials, it has to be approved, and then it has to be checked by accounting. So there's a lot to these slips. But notice that it's being charged to work in process, and it's going to be put into assembly. Okay. Because now they're actually taking the raw materials in this case and using them for assembly into finished goods. Okay. So if you're following a little bit, you want to go to page 54 in your book. and I'll put that up here. If you have the edition that we use for this, it's page 54. If you have the new edition, the 8th edition, it may be 54, 55, 53, somewhere in there. But it's within the same range. So here are the raw materials. Wallace is going to be using $24,000 of direct materials and $6,000 of indirect materials. Now remember, direct materials are very specific product costs, whereas the indirect materials are either put into manufacturing, or they're usually put into manufacturing overhead. But in this case, we have raw material cost, $24,000 of direct, $6,000 of indirect. So what happens is, work in process inventory will get the $24,000 debit for direct materials, okay? Manufacturing overhead will get the $6,000 debit for indirect materials. And the raw materials inventory account will be depleted by $30,000 because we've used $30,000 of raw materials in this job of whatever we're creating, okay? So as you notice, raw materials, the inventory account, this is sort of a little peek at the ledger, will show a reduction of raw materials of $30,000 because $24,000 of those materials are been put into the work in process inventory account, and $6,000 of those materials have been put into manufacturing overhead for this job. So this is on page 54. It's very important to make sure you have that handy because you're going to be asked to do these exact types of entries, journal entries. On the bottom of page 54, they have an illustration kind of showing you how these things sort of post, okay? Now here they have the work in process inventory is listed. Remember, we just put a debit of $24,000 in work in process inventory. That $24,000 is now assigned to specific jobs. So again, job 101, this is again all direct material. These are coming from direct materials. Okay. So $12,000 of the $24,000 of these direct materials are for job 101. Job 102 has $7,000 assigned to it of the $24,000 that's part of this work in process. And job number 103 has the remaining $5,000 of this $24,000. So again, 12 plus 7 plus 5 is 24. This is just showing you how the $24,000 of direct materials are assigned to each job, right? So notice, it's very important that you understand that that's part of that job cost system. You're assigning the costs specifically to each job, and these are the jobs that are listed here. Oh, this is a very interesting story, and I'm glad the book has it. A company called iSupply will tear apart any iPhone or electronic piece to let a competitor know what the cost of the components are. It's very, very interesting because a lot of people, like a lot of companies, think they can make their own product. And that's true, a lot of people can make their own types of products, but you really kind of need to know the cost of your competitors' products to see if you can be, if you can compete with them and sell your product. And so this is a company called iSupply. For a price, they basically tear apart electronic devices and tell you how much it would cost to replicate it. And in this case, it breaks things down. So companies that might be interested in producing iPhones, for example, or cellular phones, understand what the costs are involved of an iPhone. And it's provided right there. I think it's very interesting because again, it's specific to cost, right? And a lot of people think they have very good instincts about certain things, but it really comes down to making sure you know what the costs are. You know what the costs are. These are very specific to the iPhone itself. Whenever this was done, $170 to actually physically make the components. But that's not all of the cost. You have to consider there's, of course, costs that are not non-manufacturing based costs, like research, design, marketing, selling costs, et cetera, that are going to be part of this. But in terms of the manufacturing of this, these are the costs that are involved. Again, this was based in a 2010 article, so it's 10 years old. Interesting company, interesting idea. All right, so if you're moving along, we're on page 55. And this particular learning objective ends with allocating factory labor costs, okay? Again, we assign them to specific jobs. How do we know what to assign to a specific job? Well, it's because the labor gives us time tickets, okay? Time tickets are prepared to show the work that was performed. And time tickets include, you know, the name of the employee or employees that are working on that job, the amount of hours that have been worked, the account and job that has been charged, and the total cost. And you'll see what this looks like on a time ticket right here. So this is also, this is at the bottom of page 55, showing that the employee, John Nash, worked 4 hours on this particular job, number 101, right? At a rate of $10 per hour, the total labor cost that needs to be assigned to job 101 is $40, okay? Again, it needs to be approved by the manager or whoever manages the employees here or the time tickets, and it has to be costed out by usually accounting. So time tickets are sent to payroll and they sort out hourly rates and total costs, etc. All right, so in this particular illustration, which is on the very next page, page 56, it shows here that this particular company had $32,000 of total factory labor costs. 28,000 was direct labor. 4,000 was indirect labor. Now remember, direct labor is specific to making the product. Indirect labor is not specific to the manufacturing process of making the product. So this usually is assigned to overhead. So the entry, did I say journal? Yes, journal entry. Two things happen. First is we are assigning $28,000 of labor to the work in process inventory, because now that's being done. We are also assigning $4,000 to manufacturing overhead to cover the indirect labor of this job, which means we have now exhausted $32,000 of original factory labor that we had started with back in Learning Objective 1 when we were putting together manufacturing costs. This is how it looks in the journal, as you remember from the previous slide. This is how it looks in the ledger. So in the ledger, we have exhausted all of our factory labor costs in this process, okay? We have assigned $28,000 of those costs to work in process inventory. So these are the employees that are actually making the products in the work in process inventory account. And then we have assigned 4,000 of those costs to overhead. Again, labor that's not directly linked to the manufacturer or something. Oh crap. I think I just, I have to stop sharing for a moment, come back, and I have to reshare the PowerPoint because I got a little message from Wiley saying, you're out of time. Hey, you gotta go, you gotta go. All right, let's go back. So this is showing the work in process inventory with additional labor and manufacturing overhead with indirect labor. How this looks on a broader scale, this is on the bottom of page 56, okay. Notice that what we've done here is the $28,000 we just assigned to work in process inventory is about labor. So notice labor is that second column of these job cost sheets, okay, all about labor. So what we're doing is now we have to assign the specific $28,000 to each job. So job number 101 had labor costs of $9,000 on January the 10th and $6,000 on the 31st. And so $15,000 of the $28,000 are assigned to job number 101 for direct labor. Job number 102 had a $4,000 direct labor entry on the 15th and $5,000 on the 22nd. So $9,000 of the $28,000 has been assigned to job number 2 for direct labor. And the remaining $4,000 of the $28,000 has been assigned to direct labor for job number 103. And so this information would be provided to you by looking through the time tickets, among other things that are provided. All right, so now we are in a review, the Do It 2 review. So for those of you that have your book, it's on page 57. For those of you that don't have your book, it's okay. It's right here on the slide, and you'll be able to see it again in the reading. So here is a company, Danielle Company, and they're working on 2 job orders, okay? As you see, there's job 120 and there's job 121 listed for direct materials, direct labor, and manufacturing overhead, okay? What they want us to do is prepare the entries to record the assignment of costs to the work in process inventory from the data of these sheets. Okay, so that means that we have to go back to what we learned on the last couple of pages, the last couple of slides, to make sure we are doing the proper entries. So for direct materials, we have $6,000 for job 120, and we have $3,600 for job 121. So how much of direct materials are being used in work in process? Well, we have to add both of those up, right? So we have work in process inventory with the debit of $9,600. Remember, this is a subsidiary account for inventory showing, so it acts like an asset account. Debit show more of it. Raw materials, we just use these raw materials. So raw materials inventory, again, it acts like an asset account, shows a decrease in raw materials. Why is there a decrease in raw materials? Because we've moved that to work in process. So we're using it. It's no longer raw materials, now it's part of the work in process. So this you have to remember. The next thing is direct labor. Direct labor, we have $4,000 of direct labor for job 120 and $2,000 for direct labor in job 121. So $6,000 of total direct labor needs to be assigned to work in process. And so if you remember from the previous slide, we have a debit to work in process inventory, showing there's more work in process inventory. $6,000 credit to factory labor shows that the factory labor account has been used now and reassigned to work in process inventory. And in terms of manufacturing overhead, we have $5,000 of overhead for job 120, $2,500 of overhead for job 121. We have to, again, assign those costs to work in process. And so here you have work in process inventory with the debit for $7,500, showing we have more work in process inventory. And then the manufacturing overhead account will show that that has been decreased and moved to work in process. And that is learning objective 2.